Welcome to the channel. I'm James, and today we're looking at the Coca Cola company, ticker symbol KO. They've just recently released their earnings, and what I'm going to be doing today is going through those earnings, then giving my new fair value of the company using discounted free cash flow models and the Buffett-Graham intrinsic value. Is this stock a buy or a sell in 2022? 2022 now, that seems crazy. Anyway, what is Coke doing right now? Well, it's about $60, $61 a share, down from its highs of $62 just a couple of days ago. But if we look to what this has happened since the pandemic, it's actually broke through the pre-pandemic levels, which was just about $60 a share. So this could be really new heights for Coca-Cola and back on that constant upswing it was previously on before it went down to about $36 in the pandemic in March. What a great buying opportunity that was. I remember buying some Coke a little bit later in November and I was still very happy with it. But if anyone really gambled on it then that was a genius investment. So let's have a look at the financials. We've got the 3 months here and then we'll be going through the year underneath. Firstly, we're going to look at the net revenue, and is this up from 2020? Yes, it is up 10%. 8.6 billion in 2020 for December 31st quarter, and that has gone up to 9.4 billion. So that is a pass, it's on the up. And if we look at the net revenues for the year, we have 2020 here and 2021. Well, what's happened is that it's up 17% from 33 billion to 38.6, which is also their best year ever. So that is a pass. Revenues are up. Next thing we want to care about is the profit. How do we get the profit? Well, the profit is here on the net income to shareholders. Profit is revenue minus the cost of good and everything else. So if we look at the costs of goods sold for Coke in that quarter, 3.5 billion to 4. So that is up slightly, but it didn't matter because the profit has gone from 1.4 billion to 2.6. So with everything else, that is a 66% increase. And if we look on the year end, costs of goods sold was up about 14%, 13.4 billion to 15.3. But if we look at the net income for the shareholders, 7.7 billion to 9.7. That is a 20%, 26% increase. Earnings per share, just another way of looking at it, $1.80 to $2.26. So that is up. Next, we're going to be doing is having a look at the shares outstanding. Are Coke issuing more shares? And we can get the shares outstanding basically if we just look for the word shares. You can see here, this is the average shares outstanding. 3 months ended, 4.3 billion has gone up to 4.321 billion. So that would be a fail. The shares has gone up for the quarter, but has it gone up for the year? Yes, a similar story. So slightly increasing Coke. So that means that they are diluting shareholders slightly, but as long as they can invest this capital wisely, and then in return, this can generate revenues and profits. Therefore, this will generate a good share price and then dividends. Also, I didn't mention the Coke dividend is around about 2.5%, and the ex-dividend date is the 14th of March. So buy before then if you want your shares. And finally, what we want to look at is the free cash flow. Now we're going to look at free cash flow for Coke. And how do we get free cash flow? Net cash from operating activities minus capital expenditures, which is this line here. Coke only has the year end, so we're not going to be discussing quarters here. We're only going to be talking about the year end. And what does this give us? Well, for December 2020, they had net cash of about 9.8 billion. The capex was 189 million, so that gives us about 9.7 billion, whereas now it's up massively, 12.6, and capex is actually down, so we've got 12.5 billion in free cash flow. So what does that mean in terms of free cash flow ratios for Coke? Because Coke are about a $260 billion company with 12 billion in free cash flow, that gives you a free cash flow ratio of around about 21, and they pay 7 billion in dividends, so that dividend is safe, so they can easily pay off their dividends to their shareholders. So finally, what we're going to be looking at here is the discounted free cash flow analysis. We've calculated the future free cash flows for Coke. This is with 2022 being actually down from 2021. So this will be interesting to see what this returns as a value. Even then, in 2024, Coke will still not have had the 2021 value. So let's see what discounted free cash flow has the stock as. Well, that has a calculated stock price of $77 a share and 38 cents, which is a 26% discount. Then if we have, let's just play around with these numbers a little bit. Let's just say the free cash flow net income is increasing, which it has been. So let's say it gets to about 134%. This still puts it up slightly above 2021 numbers. That would give it a calculated stock price of $87 a share. So free cash flow, discounted free cash flow, really loves this stock. Next one we'll be looking at is the Buffett Graham intrinsic value models. This takes earnings per share, and Coke's most recent earnings per share is $2.25. Expected growth rate of 9.84%, and their bond yield, the highest bond yield I could find of Coke was 4.2. So what does that give us? Still a buy, yes, $66 a share, which means it's currently at a 9% discount. So both of the models are saying it is a buy, but discounted free cash flow likes a lot more. If you were to average this out, it's around about $76 a share. So both models are a buy, which is excellent, but discounted free cash flow loves it a little bit more. Let's just quickly have a look at some of the technicals here. We'll add some moving averages here. We'll look at the 50-day, 200-day, and 100-day. We have the 50-day in green, the 100-day in yellow, and the 200-day in red. And what are we seeing? Well, the price is above all three of the major moving averages, which is a very bullish sign. The 200-day has acted as a pretty consistent support level for Coke. Whenever it's broken down below that, it's immediately gone to the upside again, and it's had some very strong moves. So if it was to get down to $56 a share, that would be a massive, massive buy signal. The last time it really broke down there consistently was during the pandemic drop, but I think that is not really a consistent thing. So it really is held pretty strong up until May of 2018. So according to the moving averages, Coke is a buy. Now we want to be looking at the MACD, which is the moving average convergence divergence. And what this is saying is we currently have a negative trend. It's slightly negative because the signal line and MACD line have crossed the other way around. You can see by the red histogram, but the signal lines, MACD and the signal line, are above the zero line, which is a bit bullish, but bearish that it has switched. So you could be waiting for this to drop back down, then wait for a switch again, and that would be your buy. If you look over the last year on the MACD, you would have bought Coke there, sold it there, would have made money. You would have bought Coke there, would have sold there, and would have made money, and you would have bought Coke at there, which was $54 a share, and you would have then sold at about 61. So MACD has really been a good indicator on this stock for the last year. And finally, let's have a look at the RSI. So there's two I like to look at here. First, we'll look at the daily. The stock's trending in sort of average regions here on the daily. It was just about past its all-time highs, and if we go to the year and zoom out, well, just before the pandemic was the last time it broke real highs and then lows. And if you look at the lows on the daily, that was a buy, that was a buy, that was a buy, and that was a buy. So if you ever see Coke in the dailies with a value about this low, that would be your buy signal, as when it has, it's shot up massively again. And if we just quickly look at the weeklies, what is that telling us? Well, this goes back to 2016. Weeklies, it is trending towards the high side again, but this is all-time high. So it did break before there. Obviously, the pandemic then caused us to drop, so we didn't really know where Coke was going after that. But I would say technicals, it is looking like a buy, and fundamentally, the stock is very, very solid. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.